Hey guys, and welcome to another episode of Monday Mortgage Madness. I'm Sean LaRue with Franklin Loan Center, and I'm having a great day, and I hope you are too. Thanks for joining me today. We're going to be talking about occupancy today, and we have basically three different types of occupancy. We have the primary residence. This is the property you're going to live in. We've got a second home option, which is like a vacation property that you're visiting every once in a while for vacation. And then we have investment properties. And investment properties are ones that you're renting out. These are your duplex, triplex, four unit properties, and any properties that you're renting for short-term or long-term rentals. Join me on today's episode. We'll teach you some more about occupancy, your loan status, and how you qualify. All right, so let's dive into occupancy for home loans. When you're applying for a loan, the loan officer and the underwriter are both going to be looking at where you work in relationship to how far away the property is from where you work. Occupancy and your ability to repay is crucial in determining the occupancy. Let's say, for example, you live in LA and you're trying to get approved for an FHA loan. If you're more than 90 minutes away in that commute, typically they're going to be looking at that property. If you're looking out here in like the Palm Springs area, but you live in Corona or something like that, if you live and work in LA and you physically have to be on site every day for your job, it might be considered a second home, because are you going to be commuting back and forth? Do you have the ability to work remotely? There are a lot of people now who are able to work remotely and do not have to physically be on site to do their job every day. That might apply to you. So with primary residences, and primary residences are ones that you're going to be living in, the underwriters are looking at where you actually live now, your commute in order to get back and forth to the job, and your overall financial status to determine the actual occupancy. A primary residence is one that you're actually going to live in, and you're going to be there more than 50% of the time. That's 4 nights, 5 nights a week. It's going to be very important when you're doing the commute worksheet and letters of explanation. The second home, again, the second home is one that is a vacation property that you're not at more than 50% of the time, and that is at least about 100 miles away from your primary residence. There's all different kinds of concerns that they look at. Obviously, a second home isn't going to be one that's only 30 miles away. It's got to make sense. Are you buying a property in a ski resort? Is it a vacation destination? Is it a cabin? The second home market is very interesting, and it's got to be far enough away from your primary residence. Again, investment properties are ones that you're renting out either for short-term or long-term use. If you are renting out the property for the majority of the year, that's going to be an investment property. It's not going to be a second home. So that's something to consider. So how does occupancy apply to interest rates and down payments? So typically you're going to get the lowest down payment requirements on a primary residence. The primary residence can range with different loan programs from no money down with down payment assistance programs to as little as 20% down to avoid the mortgage insurance. The interest rates between primary and second homes are generally going to be about the same depending on the down payment and the programs that we're using. But when comparing that to a second homes are going to typically require about 10% down as a minimum in order to qualify for the second home loans. Investment properties, now we have all different kinds of interest rates and programs for investment properties, but just think that the rule of thumb typically for investment properties is going to be a 20% down payment. You'll get the best interest rates by putting down 25% but that's just a good rule of thumb and something to consider. Interest rates on investment properties are typically a little bit higher than second homes and primary residences, but it's still a phenomenal rate of return on your investment and a great opportunity to purchase investment property and leverage yourself as much as possible. I'm not saying leverage yourself as much as possible, but to leverage yourself in case you can't pay cash for your entire investment property. So that's what I've got on occupancy for home loans. This week's Monday Mortgage Madness. Thank you so much for joining me. I really appreciate it. If you found some of this information useful, please comment below. If you have any additional questions about your particular scenario or the information for you to qualify with your occupancy, give me a call, let me know. I'd love to hear from you guys. I love going over the scenarios and putting deals together. It's like a puzzle for me, so I love figuring it out, love helping you guys. Don't forget to subscribe and connect with me on all the socials. Remember, stay hungry and stay positive. I'll catch you guys soon. Make it a great day.